We are at a crossroads for gold. That's what Gary Wagner tells me in this edition of Chart This. Gary, good to be back with you.
My pleasure as always.
Gary, last time we spoke, we were focusing on platinum. Let's look back at gold now. I know you were telling me how the metal seems to be at an important crossroads now, and we could see a bullish move here.
Absolutely, and this is strictly on a technical basis, first of all. But when we create an upper level resistance line from the various tops that came in as the market came down from 1800 down to 1181, and we draw a resistance line, we're right at the point at which if it breaks through the resistance line, it's a very, very bullish signal. If it backs off, it tells us something different. We do know that we have been forming a base at around 1185. 1181 was our first low, and then 1186 happened just recently this year, so we had that double bottom. The question is, does it have the momentum to continue to the upside and actually get bullish? And I think that that will give us a lot of information in terms of whether or not we're going to see some sort of bullish breakout.
Gary, would you say the same for silver?
Silver's been reacting differently. It has been trading in a defined range between about $20 and maybe $19 in that area. And if you look at a gold chart and compare it to a silver chart, where you see a nice little rally which is developed in gold, moving off of 1186 all the way up to where it's at now, which is in the 1250s. You look at silver, silver's almost been flatlined.
So Gary, based on all your trading experience, would you say that gold is acting in a typical manner at the start of a new year?
Well, I don't think anything that we're looking at right now is typical. We had such a dramatic fall in 2013 where the market lost, almost 30% in terms of real value. It's attempting to find footing, and it's attempting to find where a base is going to be formed and where, especially physical demand, where physical demand starts increasing.
So basically trying to find its identity. Gary, what have you brought for us today? Will you be going more in depth regarding the crossroads?
Absolutely correct. We talked about it a little bit on the last two shows, but we're once again right at that crossroads. And so I think that this week will be a very, very telling week as to whether or not it breaks through that or it backs off, because it's really going to give us opposite information. If it backs off, we've had the base, but I don't know how much upside we'll have. At the same time, if it breaks through, there's a considerable amount of upside that's possible.
All right, on that note, let's get to it.
Chart This viewers, on today's show, I want to talk about where we're at currently in gold and why I think we're at such a critical level. Over the last couple of shows, I've talked to you about the fact that I truly believe that we are at a crossroads. We're at a point in which we could see this market kick back hard, or if it does break to the outside, if it does continue to rally, I think we could have a major rally on our hand. Now, why am I looking at this with both sides of the fence still open? And really the best way to show you that is to bring up this 3-day chart in which we've created a resistance line. And realize that on this resistance line, it's not drawn perfectly, but in essence what we're trying to do is take a look at these series of tops that we have had. Of course, when we look at the market, this is 1800. This is the last time that it hit that point, meaning this top right here of our triple tops. And as this market came down, we would see it come down, and then we got this high. So we're picking it off of this high, and this high is our starting point here. And then what we'll notice is every time the market sold off, it would genuinely rally up to the point of that resistance line and come down. We talked about the fact that the largest rally that we saw last year was this rally from the low that we hit at 1181 all the way up to 1435. From there, we see it come down. Second time it comes back up. As you can see, each time it has hit that line and backed off. Now, why is that important? Well, when we consider the fact that right now this market is genuinely right within the parameters of that, and we'll convert this to a standard candlestick chart. This is an average format, but you can easily see that we are right at this particular point. Now, all I've really done is converted this chart back to a standard candlestick, and what that does for us, it gives us true opens and true closes in terms of where the market is. This is a 3-day chart that we're looking at, and you can easily see how we've come almost to, but not quite at, the top of this resistance line. So the question we need to ask ourselves is as follows. We definitely hit our double bottom back at 1181 when we compare this to June of last year and the most recent low that we hit. But we also, at the same time, have to realize that on each of these last occasions when the market has rallied higher off of any kind of low, it has hit this resistance line and then backed off. So the question becomes, are we going to see the market come in and then back off, or will we get some sort of a solid breakout above this resistance line? And of course, one of the ways that we want to look at this current market is through our current Elliot wave count. And we've talked about that before. Let's go ahead. We're going to pull up a 3-day chart again. But on this 3-day chart, we've got our current Elliot wave count. And when we look at it, this is what I am looking at. We had our wave 1, our wave 2, wave 3. This was wave 4. Wave 4, of course, was composed of an A, a B, and a C. And I believe that we're currently in our final wave 5. It's going to be the washout wave, because once it does conclude, we'll either move into a rally, which is just basically an ABC, or a counter trend. And of course, a counter trend to this most recent market activity is down. But here's the key. The fact is that we looked at the market as forming a double bottom, so that we know that we have really good support at around 1181. At the same time, each time this market has started to rally, as we talked about, it was kind of halted as soon as it hit that upper level resistance line. And so now we're quickly approaching this resistance line. The question is whether it's going to break out or break back down. Yesterday, on last week's show, I talked about the real distinct possibility I felt it would break down. That was my belief at that point. However, it has been stalling in this area. You can see we've had on this 3-day chart. Let's go ahead and convert it to a daily. And as you can see, all I've done is converted the same chart into a daily. It is still in standard candlestick format, of course. And as I said, if you would have asked me last week, I believed that it would have some downside pressure. And I've put in a couple of fib retracement points. Let's go ahead and compress this chart just a little bit so you can see where they're coming from. And what we have done is we've basically created some fib retracements from different lows as well as our highs. And the key areas to watch, of course, was 1219 and 1221 as it came up. It broke through that, and then we had another one at 1249. And you can see we've broken through that, but we are right at that point, as I said, once again in the marketplace. Now, this show was recorded here in Hawaii Sunday evening, approximately 6 o'clock. So the market's been open roughly for 5 hours in terms of gold trading. It was trading much higher. You can see this. We're looking at a 720-minute chart, and you can see how it spiked up. But this is where we're showing our current resistance at about 1257. And so, as I said, the real question is going to be how the market reacts at this crossroad, because when we look long-term at this market, there's only been a couple of instances here and here when we've actually seen this market attempt to or go close to our current long-term resistance. Of course, short-term, we absolutely broke through our short-term because we would look at this top and this top here. However, our long-term, we are right at that point. Now, in terms of what the market's going to do, we'll have to see how it unfolds this week. And what we're offering Kitco viewers and Chart This viewers, of course, is our bonus content, the additional bonus content that we offer on our website. To get to the bonus content, because we will update this recording as the markets trade, and we'll do an after the show on Monday morning, so that if there's any dramatic change, you'll be able to watch that. So for those of you who do want to view this week's bonus content, you do have to become a member of the Chart This After the Show membership. It's 100% absolutely free. Simply go to our website, thegoldforecast.com. If you scroll to the bottom of the screen, you will see this Chart This After the Show, and just go ahead and click that. When you click that, it will take you to this page. You click here where it says create a free account. Create the free account and it will allow you instant access to watch not only after the show today, but the archived after the shows, as well as some other bonus features. Again, we are at a crossroads in this marketplace. We could see a dramatic rally if it's able to take out our long-term standing resistance.
Gary, thanks so much. Thanks for being back with us, and we'll see you next week.
My pleasure, and I hope that the viewers of Chart This are able to take this information and have it help them with their personal strategies and investments and trading.
And thanks for watching this edition of Chart This with Gary Wagner. We'll be back next week. In the meantime, you can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Happy trading.